We're speaking with Professor John Hicks from Charles Sturt University. How are you, Professor?
Good, thanks.
Good to be chatting with you as interest rates have been so settled and low for some period of time, but now starting to climb in Australia. I guess, first of all, just explain why the Reserve Bank starts the interest rates moving upwards in the first place.
Well, one of the Reserve Bank's primary concerns is the rate of inflation, and they're tasked with keeping inflation within the bounds of 2 or 3% per annum. As we've seen recently, inflation has been running at about 5%, and many people consider that it will continue to run at above 3% for quite some time into the future. So the Reserve Bank has to act to try, to the extent it's able, to bring inflation back within the 2 to 3% range. Reserve Bank can do this to some extent by raising interest rates throughout the economy, which dampens down demand. And if demand is dampened down, then the pressure for price rises is somewhat reduced, although most of the increases in prices that are occurring at the moment are arising on the supply side because of problems associated with COVID and problems associated with the war that's taken place in Europe.
All right, and when you look at the interest rates, we've been trying to sort of pick up what's happening in other parts of the world. The central banks looking like they're going to keep pushing them upwards to contain inflation, among other things. Where do you think they'll go in Australia?
They'll certainly continue to go up, but I expect it will go up at a relatively moderate pace. The Reserve Bank doesn't want to act in a way that brings us into recession very quickly. It rather just wants to keep a check on the rate of growth of demand in the economy so that it doesn't exacerbate the inflation problem. So I would expect over the coming months that we will see rises that we saw last month of about the same level. Perhaps a little bit more, but not a great deal more. But I think we can expect to see inflation going up for quite some time yet, and therefore I think interest rates are going to follow an attempt to try and rein that inflation in to the extent that higher interest rates are able to do so.
Now, I think if I've got this right, those that had mortgages, there was a greater interest in fixed-rate mortgages in recent times. I guess that's some comfort for those that got into that market, but for homeowners, there's going to be some distress if they've got an interest rate that is, I guess, with that mortgage stress level that's been high in Australia for some time.
Well, a variable interest rate loan holder will experience a bit of pain almost immediately as the Reserve Bank pushes up the cash rate. Interest rates on loans are going to go up, and if you're on a variable loan, then your interest rate will certainly rise. Those who are on fixed rates for the time being are lucky, but we would expect this bout of inflation to continue on into the future, and when they come to renewing their fixed rate loan, they may find they're in for a bit of a shock.
Now, this the cash rate the Reserve Bank has to, I guess, try and contain inflation. Is it fair to say it's a bit of a blunt tool in that respect, or it's got a limited ability to actually control inflation in that regard?
Well, it certainly has limited impact at the moment in terms of the type of inflation we're experiencing. That inflation is due to cost pressures, which are pretty much out of our economy's control and therefore out of the Reserve Bank's control. So what the Reserve Bank is trying to do is to ensure that it's not adding to the inflationary pressures by allowing demand to run ahead too rapidly.
I guess when we look at the Reserve Bank, I believe the Labor government has commissioned a review into its role, or it's the first review in some decades. Do you know much more about why that review's been commissioned and what we might expect from it?
No, I don't know the reasons behind it, but in essence, it's not a bad thing. All of our government institutions need to be reviewed from time to time to ensure that they are doing the job they are tasked with doing it, and doing it in the most efficient way. If a review is held, I don't expect major changes will come out of it because I think the Reserve Bank is doing a pretty good job and has been for quite some years. So no major changes on the horizon, one wouldn't think, but the idea of a review is certainly good, just to ensure that everything is operating as it's intended to.
Well, I think during the Howard era and now was the Morrison era, there was a little bit of grumpiness, if I can put it that way, from the government that the Reserve Bank made a move on interest rates during an election campaign. But doesn't that speak to the independence of the Reserve Bank if they're doing so without regard to whether there's an election on or not?
Exactly. The independence of the Reserve Bank is probably the important aspect of the operation of our monetary policy. We need the Reserve Bank to be able to make the decisions that it sees as appropriate, regardless of the political situation. So any review that is tasked with trying to change the way the Reserve Bank operates because of political factors is probably going to be a waste of taxpayers' funds, because we actually need an independent Reserve Bank.
Now, just lastly, I think I forget how long it's been, but we've had this downward trend on the cash rate and therefore on interest rates. There's been this debate about banks passing on cuts to interest rates. Are we seeing banks swiftly passing on the increase to the cash rate?
Yeah, we are, but it's not a one-for-one change. What's happening is that the cash rate increases the costs to the banks of raising funds that they then lend out. The extent to which they pass the whole of it on, or part of it on, or even more of it, increase interest rates by more than the cash rate has gone up, is determined by the market in which the banks are actually operating.
And I guess that's a factor of competition, among other things. There's pretty healthy competition in the banking space at the moment.
Yeah, competition is vitally important in our financial sector, and we would like the markets to determine the outcomes.
Professor John Hicks, thanks for joining us on that and breaking it down for us. You've got quite some expertise in the area. Thanks again for being with us on Flow today.
You're welcome.